If you look at the global space today, the big story is about Abenomics. The Prime Minister, Shinzo Abe, is leaving office because of his state of health. He's been in office since 2012. To Chinese banks, brutal earnings. The authorities in China says they allow their banks to make provisions for profit loss in north of 219 billion US dollars. You have the US economic data this week, the Chicago PMI. Later on Friday, we'll get the jobs report. That's what we're talking. So let's get a bit of a chat into this with Uchenna Minis, who is an FX trader and the managing partner at BlyFX Nigeria. Good evening, Uche. Welcome to the show.
Good evening, boss, and thank you for having me.
Okay, I would like us to start with the oil story, but let's talk about the U.S. PMI data. Do you think these numbers, how do you think this figure will come through today?
In recent months, we've started to see U.S. PMI sort of trade upwards, sort of print upwards. So we're expecting some sort of better than expected data in terms of the PMI. However, it still needs to be broken down in terms of if it's services or manufacturing, basically. But we are in a place right now, Boston, that macroeconomic data from the U.S. really always take, or recently I started taking the back burner, really. As right now, we are all in a speculative place. If you look at the U.S. market right now, you'll find out that every sector and most asset classes or assets in all the sectors are actually trading lower, aside from Apple and Tesla. So right now, you have high speculative activity in the U.S. global U.S. market, stock market right now. And you have couple of very high value, hyper value companies sort of holding the market. So right now, whatever PMI data prints, whatever macroeconomic data prints, it's just going to be it's really going to be, should I say, relatively insignificant. It depends on what happens to Apple, what happens to Amazon, what happens to Tesla, that can determine how market participants will react to prices in that regard.
Let's go far east, by the way, Uche, shall we? And talking about the Chinese, the numbers today, the August PMI today for the factory data today from China shows 51.0 reading. That's positive, above 50. But the banks are reporting massive profit declines. Do you think this will be very significant moving forward?
So right now, there's a lot of artificial intervention, Boston, and we can't really tell what real effect we're facing, really. It's not just the Chinese. Even the European banking index is trading significantly lower. The banking index in the US also is trading significantly lower. There's a lot of artificial intervention right now from the central bank, looking to always keep this bank well capitalized. And because of the excessive money printing have globally across board with this central bank, you can't really tell the extent of the problem because you have all of this artificial intervention. Yes, in that regard, if we shift to the PMI, yes, the Chinese PMI activity is trading higher. Actually, they are amongst the very early countries that got into open up the country after the coronavirus lockdown. So yes, this is not surprising as to what we will see with basically the manufacturing activity going into countries going forward towards the end of the year. But however, what we are seeing right now is that the banking index is showing that there is significant issues in the banking industry across board, not just the Chinese, and that in itself is being cloaked by the aggressive intervention by central banks.
So do you think we should have some measure of, should we have a party or we should just relax a little bit? Because Goldman Sachs has released a note that forecasts a bullish 59, nearly $60 a barrel for the Brent price for 2021. Are you bullish on this?
I'm not. I'm what you call neutral, just sitting on the sideline, just watching what pricing is really going to do. For me, I think there are a lot of variables that are not being considered right now. I think OPEC has gotten to the end of its rope. Whatever effect or whatever in terms of looking to cut supply, it's sort of limited because countries cannot really go beyond where they are right now. And I'm going to use Nigeria as a reference point. Given what we are facing with inflow of FX, it is really, really almost not feasible for us to cut to the level OPEC wants us to cut. And you have that with Iraq, you have that with Kazakhstan, you also have that with Angola. So you have all of this laggers, and OPEC is getting to understand the reality of active member countries to cut their production. So right now it's based on the variable of demand. So it is how economies start to trade or start to open up business activities and economic activities that will determine the demand side of this variable, which will put oil in that sustainable bullish, should I say, phase. But right now, there is still too many uncertainty when it comes to demand. And if that is not clear, I'm still going to sit on the sideline.
Okay, our final one, let's talk about currencies. I'm looking at the U.S. dollar index right now, printing 92.16. That's your DXY. The euro, the yen, the pound, the Australian, and the Aussie dollar, all up against the greenback. What does that mean for emerging and frontier markets currencies?
Right now, because of the impact of coronavirus, I think what has happened in a way, fortunately, because we have this aggressive printing from the U.S. Treasury and also the Central Bank, Federal Reserve, that has sort of pushed that downward pressure in the U.S. dollar, which in effect has not sort of amplified how negative our outlook is in frontier and emerging markets. So that's what you're seeing right now. But developed markets have sort of picked up against there. You can see the currencies trading significantly higher. Euro in itself has sort of served, it's now sort of serving as a safe haven currency, given that growth differential or that stability when it comes to coronavirus, should I say, infection. And that has seen market participants trade the euro. Also, you can see high beta currencies like the Australian dollar and the New Zealand dollar trading aggressively too in that regard. So the US dollar has been the major epicenter when it comes to the currency market and has been trading significantly lower. And I think right now, with the fragility of the market, I think it's best for everyone for the US dollar to continue to trade lower. If it gets to a point where we see any form of reversal, right now technically we're already trading at a significant multi-year support level. If we see any form of trade to the upside, we're going to see frontier market and emerging market get hit the hardest.
Uchenna Minis, thank you so much for your time today. Managing partner at BlueFX Nigeria.